Hello there. Welcome to Financial Accounting N4, still on November 2022. Right, today we want to look at a question on question 4. The question is on departmental trading statement. The departmental trading statement, and the question reads, Mzansi Food Store consists of two departments, that is vegetables and meat. On the required part, use the information given below to prepare the departmental trading statement for the year ended 30 June 2021. Then we are given the information. The following information was extracted from the records on 30 June 2022. Sorry, 30 June 2021. If we move down there, we have got information that we are given there in terms of the vegetables department and the meat department. We are given the balances there, and then we have got some additional information. We can go through the additional information, and as we prepare the trading account, we might have some figures there, or the balance that we are given in the table that needs some adjustments that are there. So we would refer back to adjustments. So for you not to skip those or omit those adjustments, you need to go through the adjustments first. So if you look at the first adjustment, saying Emioba data retained vegetables valued at 150 rands, no entry is yet been made. So we are seeing that this is a data and retained some vegetables. So what is going to happen here is that we had already sold these goods recorded as sales, and now they are now retained, so they're going to reduce the amount of revenue that we have there. So we adjust that one. Then we go to the second one, saying the owner took meat cost price 275 rands for onions. So this the meat that was taken is also going to reduce the purchases figure that we have there. So we have to take note of that. Remember, this transaction is affecting drawings and purchases, and we know that drawings is not included in the departmental account, so we're not concerned about drawings. Then we go to number 3, vegetables to the value of 900 rands were transferred to the meat department again. So it means we had done some purchases, and then some goods with or some vegetables worth 900 rands were then transferred. So it's going to reduce again the amount of purchases that we have there. Take note of that one again. Then we go to number 4, vegetables valued at 2,450 were donated to the Children's Foundation. So we have got that one, 2,450. So what it means again, for the purchases that we did there for vegetables, we also donated some of them, so they're going to reduce again the amount of purchases. So here we can just indicate here in front there that this one is going to be adjusted for purchases, and also this one we said purchases, and this one cost price, the owner took meat for, this is also purchases again for meat, and then here we are going to see that this one is going to affect the revenue or the sales. So that's what we have there. Then we'll go to import duty is still outstanding on meat, 500 rands. So it means this is going to increase the figure for import duty for meat, 550 rands. And then the next one is saying carriage on sales paid in advance. So we have got some carriage on carriage on sales paid in advance. So we know that carriage on sales, we don't include them in the departmental account. So we are not concerned about this one. It's not included in the departmental account. Carriage on sales are adjusted in the income statement under less operating expenses. So we are not going to adjust this one. So we go to the next one. So if you go to the next one now, the next one is saying inventory the inventory records on 30 June 2022. So these are the figures that we have for inventory. So they are closing inventory figures. So we are going to adjust them in the trading account again as closing inventory. So we can go back now and try to see what we have here. So it means now we are going to end our figures that we have there. So we are going to start with the figure for revenue. We are going to start with the figure for revenue. And for this figure, we are going to subtract the figure for any sales returns that are there. We have got sales returns that are there. Remember, we need to have the net sales revenue figure. So we are going to subtract this 8,300 from the revenue, 385,000 for vegetables. We do the same for meat department, that 440,000. We subtract the sales returns that we have there, 6,100. And also we are going to subtract the 150 for vegetables. Remember, adjustment one is saying MU by data retained vegetables valued at 150 rands. No entry has yet been made. So these are returns that are going to reduce the amount of revenue. This was omitted, so you need to add it to the returns that we have there of 8,300. So basically, we're just saying 8,300 plus this one, then the total figure we subtract it from the revenue that we have 385. Or we just say 385, subtract 8,300, it also is subtract 150. So that's what we are going to. So we go to our answer section there, and we are just going to summarize that working here. Now we are going to start with revenue. Right, on revenue, we have two revenues there for vegetables, for vegetable department, and also for meat department. So let's start with the vegetable department. We are going to say the figure that we are given is 810 there, 810,450. Then you subtract the sales returns that you are given, which is 8,300. Then you also subtract the 150 that was omitted. Then we get the figure for vegetables department. So revenue for vegetables department, if you calculate that one, you are supposed to get 376. Then here we get 376,550. And also we have to adjust for the meat department. So for the meat department, the figure for revenue that you are given in the list of balances is 440,000 there. And then we subtract this sales returns figure, which is 6,100. Right, having done that, if you calculate this one, you're supposed to get 433,900 or 433,900. So that's the figure that we have for meat department. So obviously we have a column for totals here. So it means we are going to add 376,550. Then we add 433,900. So the total that we get here is 810,450. Right. So from the sales, the net sales figure here, which is revenue, we are going to the next item that we have there in the trading account. Remember, after that we are supposed to subtract the cost of sales. So here you can just say less cost of sales. And we know that when you say less, we are subtracting. We know that formula for cost of sales, to find cost of sales, we say opening inventory or opening stock, then we add purchases, and we add any carriages that are there, and or any import duties that are there, we add also, and then we subtract the closing inventory. And also the purchase figure should be the net purchase figure after subtracting the purchase returns if they are there in the question. So that's what we are just going to do here below the cost of sales. So below here, we are just going to show the calculation of cost of sales. So here we're going to start by opening inventory. This is now opening inventory. And remember, it's at the beginning of the year. That is at 2021. So I just saw by the date that this is the beginning of the period or the financial period 2021 07/01. So that's where the financial period is starting there. Then we can go there and try to see what the figures for opening inventory that we have in the question. So if you come here, figure for opening inventory, they are here. You have 36,100 for vegetables and 47,900 for meat department. So before we enter that, we can just try to see if we've got anything in the additional information that is affecting that opening inventory. If we don't have anything there, if we go through the information that we have there, so we go there, we put those figures that we have for vegetables department, we have 36,100. So here is 36,100. And then for the meat department, we have 47,900. So here we're going to put 47,900. And obviously, after that now, we are going to add purchases. We add purchases. So we are adding purchases to opening inventory here. So obviously we are having two departments there. So we're going to calculate the purchases for the vegetables department, then we calculate the purchases for meat department. Remember, we've got adjustments that are there for purchases. So if we come here, we can start with the figure that we are given there for, let's start with the meat department. Meat department, for the purchases figure that we are given two figures there for cash purchases and credit purchases. And then we know that total purchases, we add cash and credit to get the total. So we're going to add this one plus this one. And then we check any adjustment that we have there, all the additional information that is affecting the purchases for the vegetables. So we are seeing that this one is affecting the meat department. So we can skip this one, but this one is affecting the vegetables. We have got 900 here. And we are told that vegetable to the value of 900 rands we have transferred to the meat department. So we're going to subtract this one. It's going to reduce the amount of purchases. Then you go to this one again. It's saying vegetables valued at 2,450 were donated to the Children's Foundation. So it means they were removed again. So they are going to reduce the amount that we have for purchases. So we're going to subtract this one. So we add those two credit purchases plus cash purchases. Then we subtract 2,450, and then also we subtract 900. So that's what we are going to just summarize there for the vegetables department. Right. So if you come here now, we can just summarize in terms of the vegetables department. So here you can just indicate by this, by V, indicating this is vegetables. Then we show the calculation. Remember, I said for vegetables, the purchase that you are given, we have verification credit. So you can say 120,000 for cash purchases, 120,275. 275. Then we add the credit purchases, 47,500. Then we subtract those goods that were transferred. We've got 900. And the ones that were donated, we have got 2,450. So calculating that now, we get, when we calculate that one, we are supposed to get 164,425. So that's what we have there. And then we are also supposed to calculate for the meat department. So we go again to check what we have in terms of the meat department. So if you come here, we've got something that we have there in terms of the meat department, right? So for cash, for the total purchases, we have got cash purchases 131,250. Then we add the credit purchase, that's 84,000. Then we check of anything that we have on the remember, we don't have any returns there in the list of balances of purchases. So we go to check if we've got anything that is affecting the meat department in terms of purchases. So if you look here, this one, the order took meat cost with cost price 275. So we are going to subtract this one. So this one was taken to reduce the purchase for meat 275. Then if you look here, they are saying also vegetables to the value of 900 were transferred to the meat department, which means these ones were taken from vegetables and then they are now in the meat department. So the purchases of the meat department is going to increase by 900. So that's what we have there. So we subtract here, we add here, and that's the adjustment that we have there. So we'll go there and summarize that working again. So we are saying now for the meat department, for cash purchases, we have 131,250. Then we add the credit purchases, which is 84,000. And then we subtract the 275, which was taken. And then we add the 900, which was transferred from the vegetables department. So that is what we have there. So if you calculate that one, we now put that one in the column of meat. The answer that we have is 215,875. Right. So remember, after adding purchases, we check for carriages, of which we have got carriage on purchases that we have. So let's check carriage on purchases that we have in the question. Right. These carriages on purchases we have got here. Carriage on purchases we've got for vegetables, we've got 11,500. Then we've got 7,500 for meat department. So we are just going to put those figures. So if you come here now, we are on carriage on purchases. Now we are saying carriage on purchases. Right. Carriage on purchases, remember we have got 11,500. 11,500 for the vegetables department, and we've got 7,500 for the meat department. And also we check off import duties of it. We have got import duties that are there. Let's check the amount that we have for import duties. Import duties we have got for vegetables department, we've got 3,250. For meat department, we've got 4,450. Then we check for any adjustment again. We have there. We've got an adjustment that we went through there of import duty. We are told that import duty is still outstanding on meat. So for meat, we are going to add 550 for the import duty that we are given there. For the import duty that we are given there for meat, which is 4,450. So for meat, we are saying 4,450 plus 550 to get the total import duty for meat. So we come here again. We are now on import duty. So we are just saying import duty. So the one that is a calculation, there we can just indicate there that we are calculating for meat. So here import duty now meat, we are calculating it is 4,450. Then we add our 550. Right. So if we add the two, for meat, you are supposed to get 5,000. So here we have 5,000. And the one for vegetables has no adjustments, and we in the balance, the figure that we are given there is 3,250. Right. So that's what we have there. And then obviously we are also going to have the closing inventory here. So this is the last figure that we are going to have. We less closing inventory here. Closing inventory. Then after that, now that's we have the last adjustment that we have. Then we check in terms of the figures that we have for closing inventory. Right. On closing inventory, we are given there at the I think at the end of this in question, that is after adjustments. We have got this figure that we are given inventory as per the inventory records on 32/2022. That's where our financial period is ending. So there the figures that we are given there indicate the closing inventory. So vegetables, we've got 97,775, and then meat, we've got 91,600. So we are just going to enter those figures there. So for vegetables, we have 97,775. 775. And then we have got for meat, we have got 91,600. And remember, these figures we are saying less, so we are subtracting. So we show by brackets that we are subtracting. So this is what we have in terms of the formula for calculating cost of sales. So here now we close here, and the final figure is cost of sales. Here we are going to show it there as cost of sales. So the figure for cost of sales is supposed to come here. So we are making the calculation there by saying we are making the calculation there by saying for vegetables department, remember this is the column for vegetables department, we are saying 36,100, we add 164,425, we add 11,500, we subtract, we add again 3,250, then we subtract 97,775. So if you calculate like that, here for cost of sales of vegetables, you are supposed to get 117,500. So you do the same again for the meat department. You do the same again for the meat department. That is, you are supposed to say 47,900. You add 250,875. You add 7,500. You add 5,000. Then you subtract 91,600. And obviously, the answer that you are supposed to get there. The answer that you are supposed to get there is 184,675. And this figure, remember, we are saying less cost of sales, so we are subtracting. So we show by brackets. Right. So before you calculate our gross profit there, remember, we have the column for totals here that we need to enter again. Don't omit that. It means that every stage there we are going to add the total. So we start with here, we add this figure plus this figure. You are supposed to get 302,175. And obviously this figure we are subtracting. This is the figure that we have for cost of sales. Then here, if you add this one plus this one, that is 47,900. And you get 36,100. You're supposed to get 84,000. Then here again, you add this one and this one, you're supposed to get 380,300. Right, so you go down to see the totals that we have there. Then also you add this one plus this one to get 19,000 there. And then we add this one plus this one. If you add 3,250, then we add 5,000, we're supposed to get 8,250. So here we have got 8,250. And then we also add this one plus this one, 91,600, we add 97,775. So the figure that you are supposed to get there is 189,375. And remember this figure we are saying we are subtracting, so in brackets. So the same is going to happen here if you make a calculation in terms of what is in the totals column to calculate the total cost of sales. If you add this one plus this one plus this one, so add this one again, then you subtract this one. You're supposed to get the figure that we have there, 302,175. So then for gross profit now, we are now saying for gross profit, we are now saying the figure that we have for revenue, this one, we subtract this one, then we get gross profit. This one here again, we're going to say this one minus this one to get the gross profit. This one minus this one to get the gross profit. So in this column, it will be just showing the total figures. So if you do that, let's try to see there. Now the final figure that we have there is now the gross profit to mark the end of the trading account. So here you are supposed to get 508,275. Then here 259,050. And here we go to 249,225. So that is what we have there. This is what we have. These are closing figures. So basically, for gross profit, we are saying revenue minus cost of sales. So when we get a positive figure there, it means it's a gross profit. Like what we've done there for vegetables department and meat department, we got a positive figure. So they are indicating a gross profit. But when now the revenue is less than the cost of sales, we are now going to get a negative figure, and it will be now not gross profit but gross loss. It will be gross loss. So basically, what it means is when we have revenue being greater than the cost of sales, we have what we call the gross profit. And the opposite is true when now revenue is less than cost of sales. When now revenue is less than cost of sales, we are going to have a gross loss. And when it's a gross loss, we show it in brackets. The figure here, it should be in brackets so that it's a negative figure and it's a gross loss. So that's what we have, guys, in terms of the departmental accounts. Let's stay tuned for more videos. Those who haven't subscribed, please subscribe and share. We are still there. Let's hang on there. Videos are still coming as we prepare for exams. With that, let's meet again in the next video.